Hey harvesters, and welcome to the channel. My name is Matt. I have been committing the ultimate YouTube sin and not consistently posting my daily updates. I am back from the UK, which is where I flew out for work. Back in the United States, I'm going to be trying to be more consistent with the videos now that I am back. So let's get the ball rolling. For anybody that is a new viewer to the channel, my Robinhood account and my YouTube channel is dedicated for income generation. This is not your long-term wait 30 years and invest into SPY or VOO and then put it into a tax advantage account. This is not that channel. We are throwing our money into a tax disadvantage account. We're just throwing into a regular Robinhood, and we're going to be trying to produce a income stream from the money we have in there. And the whole purpose of it is to either create an income stream now to help us with bills, groceries, mortgage payments, trucks, whatever, like car payments. Or if we stay disciplined and stay true to the philosophy and try to grow this account over the next 5 years, we might be able to retire. But I don't like to use the word retire. I'm just going to say give you the flexibility that money provides, where you wouldn't have to work a W-2, or you can still work a W-2, but it's actually going to be a job that you enjoy doing. And then the money we make from generating this income and running these very safe options like covered calls and cash secured puts, then you could be able to live off that income and then buy the things that you want. But that being said, the first thing I like to talk about on the channel is my Robinhood account value. And that's more so sign of transparency. You guys can see the number go up or down. And right now it's valued at $166,647.65. Let's head over to the Excel spreadsheet where I'm going to be talking about the last 5 or 6 trading days since I've made the update. Plus, we're going to take a holistic view of the last 55 or last 56 trading days and see how the progress of this channel and this Robinhood account has been going. Let's go over there. All right, guys, now that we're looking at this spreadsheet, I think we actually have to go through the next like 8 trading days, but I'm going to keep this quick and to the point. Over the last week period, there was a couple of main themes here. For the most part, I had a couple of covered calls that were assigned on that Monday, June 23rd, assigned. So I made about $191 on June 23rd. Moving into June 24th, because I had a couple of assignments, I was very aggressive at trying to sell these assignments. Plus, I was able to capture quite significant upside in my QQQ assignment. Basically, bought in at this 533, and then the QQQ shot up to the 539. So I was able to capture about $600 of appreciation. So that's realized gain. So that's why I annotated the number. But between the premium and then that appreciation, on June 24th, we made $762. And to kind of take a step back, don't want to go too fast, but the main strategy I adopt for this Robinhood account is running covered calls and cash secured puts. For anyone that's not familiar, running a covered call, you have to own 100 shares of the underlying or the security, whatever you want to call it. You have to own 100 shares of the stock. And then once you own the 100 shares of stocks, you can run covered calls against it. So you pick a specific strike price. And the way I operate, whenever I have a covered call, I don't like choosing a strike price that is below my cost basis. I will choose strike prices at my cost basis or higher. Therefore, theoretically, you can never lose money if you choose strike prices above your cost basis or your DCA, whatever you want to call it. Unless you are willing to risk potentially taking a loss, it's really difficult to lose money running covered calls. You have, but for cash secured puts, it's a little bit more of a gamble. So the way the cash secured put works is a little bit different than the covered call. Cash secured put, the only thing you need to bring to the table is collateral, because an investor is going to pay you an upfront premium so that you can lock in buying their shares at a specific strike price. Basically, that's with the intent that the market's going down. The investor is going to want to offload their shares, so they're paying you, hey, like if it goes down to this point as like a safety mechanism, you're going to have to buy these shares from me. And then at that point, you would need the amount of collateral to buy those 100 shares. So now that we kind of got that basis down, for June 25th, only made $58. And after June 24th, I got into very conservative mode. The market was relatively high. I think the QQQ was trading at like 545 range, and I was a little bit worried that this is a little bit too high. However, I think I played it way too easy. I will say this, for the week of June 23rd, I've already made my money on that Monday and that Tuesday. So I pretty much already got my goal of that $1,000 a week. And then so the rest of the 3 trading days. I took it very conservative. I just ran cash secured puts that I didn't think were actually going to hit. So therefore the premium was going to suffer a little bit because of that. So for June 25th, $58 of premium running cash secured puts, June 26th, $35, and then June 27th, which was last Friday, $21. I already made most of my money. Just wanted to pass by and see what the next 3 trading days were going to do. I was hoping that the market was going to go down a little bit so that I can grab a couple hundred shares of stock at the QQQ for relatively cheap, but the market was still pushing higher and higher. So this begs the question of what I'm going to be doing for the last trading day for June or July 3rd. But let's first talk about June 30th. For June 30th, which was Monday, made $77 of premium. I was still under the thesis that the market was a little bit overpriced. So I didn't want to actually buy any shares. So I was running relatively conservative cash secured puts. So locked in about $77 of premium. Nothing too crazy to write home about there. But July 1st, because I didn't have my $166,000 of money actually invested into stock at certain points in time, Robin was kind enough to give me 4.5% based off of the money. So with that being said, I made $218.52 of interest based off just owning or having cash in my account for the month of June in between like running options. So that was quite nice payment to just hit the account, start the week off on a good note. And then same thesis applied today again, so same thesis applied for July 1st, cash secured puts. Thought the market was too high, so I just ran very conservative, cash secured puts, made $9, made $24. I didn't want to choose a strike price that was too close to at the money. I didn't want to get this assigned, so I was playing the conservative side. And then in total for July 1st, made $251.52. And then also on July 1st, I bought about $2,500 of SPY from all of the different premiums I've made over the last couple of days. Lastly, for July 2nd, I made $169 of premium. I was a little bit more aggressive choosing strike prices for my cash secured puts because I'm like, all right, I'm just going to have to accept that the market is going to be priced a little bit higher. So therefore, I made, $169 running cash secured puts. And I think for July 3rd, I think I might just buy 100 shares off the bat. So then I could run 1 covered call, probably on the QQQ. And then I'm going to run 3 cash secured puts. And the goal is to make about $100 to about $125 per contract because I am really close to $497 of premium gain. And ideally, I like to hit that $1,000 goal. But then July 4th is on a Friday, so we're going to have Friday off. And then July 3rd is going to be a half day. So I want to maximize as much premium as I can tomorrow and potentially hit that $1,000 of the week. Yeah, I want to see if we can hit that $1,000 a week goal. With that being said, guys, let's go over to the other side of the spreadsheet and talk about the last 56 trading days, just running these covered calls and cash secured puts and see what it looks like. You guys know me. This is the favorite part of my videos, is talking about how the performance is actually being played out. So let's take a look. Moving over to the 56 trading day, the last update we had was at trading day 48, and the account was valued at $163,482 over the last, I don't know, what is that, 8 trading days. We have increased the account value to $166,753. If we look at that as a percentage, we're up 13.97% since I've been running these options back in April. And if we look at the realized gain between share price appreciation and premium I made about $17,376.15 on 56 trading days. So let's talk about the details and the micro data. We just looked at the macro, now let's look at the micro. My trade win percentage is 98.21%. I had 55 winning days, 1 losing day. I had this 1 losing day back on April 22nd, which is a scarlet letter for my trading methodology. I was being a little bit too aggressive. The market was down below my cost basis. I was willing to risk selling my shares, my covered calls below my cost basis. The market was going up. So then I rolled my options, and then, but the problem is I didn't roll my options further away, and I didn't roll them to my cost basis. I still wanted to squeeze out more premium. I was being greedy. So then I took a loss because I was greedy. If I just would have been staying true to my philosophy of, if you're running covered calls, don't run a covered call below your cost basis. If I just would have been following that simple methodology, I would have not had that loss. But we live and we learn, we make mistakes, and hopefully you guys can learn from them and then not make the same ones. But either way, over the last 56 trading days, winning 98.21%, I think is a massive win. The average premium I'm making per day is about $310.29. If you look at that as an average rate, we're making about $1,448.01 per week. And if we look at the average monthly premium, that's about $5,651.88 per month. So let's talk about what we have here in the yellow. These are just estimate numbers based off of the performance of my account over the last 56 trading days. So the way I came up with the yearly premium estimate, as we have here, is I just took the weekly premium and multiplied it by 52, because we have 52 weeks in a year, and that's how we came up with this $75,296.65. If we can hit this number, I would be really happy. However, the markets might not continue to go up forever, and eventually we're going to hit a point where it might stagnate or might even start regressing. But as it stands from the last 56 trading days, if everything stays exactly the same over the 12-month period, I will make that $75,000. If we look at that number as a yearly percentage based off of the amount of money I have in the account, that would be a net gain of 51% in that year, which is a massive amount. Usually the S&P 500 over its lifetime, I think it's like 8 to 10%. So to make 51% is quite impressive. It might be optimistic saying that this will happen, but guess what? A man can dream, and that's okay. When I first started this covered calls and cash secured put trading back on April 11th, I came up with a conservative goal of 29,000 because my account was a little bit lower at 86 when I first started this. Now it's at 166,000. Some of it is I put my own money in, some of it was actually gained. But I still wanted to keep that goal and stay humble. And we are currently at that $17,376 on the year. And we have about $12,364 to go. We are well on our way. And I think I could probably hit that maybe in 2 months, or if we go very conservative, probably 3 months from now. So maybe by July, August, September. So maybe by the end of September, we should meet this goal of that $29,000. But continuing on with our dream theory, I came up with some estimates based off of how my account was performing. And so at the end of 2025, I will make about $55,024 of estimated income. That's either, realized appreciation or premium. And over that period, I'm going to have to pay about $19,258 in taxes. I am a high income earner, so my tax bracket is going to be that 35% range. And I'm going to have to pay the tax man. Not a bad problem to have, but it's okay. By the end of the year, my account should be about $181,872.54. Now let's take a look at the maybe next 5 years and see where we're at. So at the end of 2026, I should have roughly $242,710. And basically, before we go a little further, is I'm basing these end of year values off of this 51%. So every single day, however the market conditions perform, this end of year value is going to change. But let's continue forward. So we talked about 2026. What are we going to look like in 2027? 2027, an estimate is going to be the account is at $323,899. 2028, $432,000. 2029, $576,000. 2030, we're going to be at that $769,000. Let's look at how much estimated income we're going to be making. If we get to 2030 and I'm making $296,000, I'm not working anymore. There's no need to. However, if I just wait one more year and continue to make my high income salary plus, this options income, then the account will be valued at $1 million. And the estimated income, $396,000. That's pretty good. Wait one more year after that, we're going to be making $500,000 a year, and the account's going to be at $1.3 million. And maybe if I just suck it up all the way up until 2035, account would be at $3.2 million, and I'd be making $1.2 million every single year. So maybe if we just suck it up for 10 years, this might be able to change our lives. But that's the goal. How everything plays out in the next 5 to 10 years, Nobody has a crystal ball. I don't have it, but a man can dream. And I hope that we are maintaining this 51% year over year. That would be great. Let's look at the weekly numbers. All right, guys, let's take a look at the weekly tracker side of the things. Over the last 12 weeks, we've had 9 weeks where we're at 4 digits or higher. So that means $1,000 or more. And then over the last 7 weeks in a row, we've hit that 4-digit club, making that $1,000 of premium / appreciation. So that is exactly what I want to see. For the current week, we're at $497.52. And that's what I was saying on the previous side of the spreadsheet, where if I can get one covered call at QQQ and maybe 3 cash secured puts and be relatively aggressive, I might be able to squeeze out $500 of premium so that we can make 8 weeks in a row. However, I don't want to get sloppy. I don't want to make mistakes when we're at the end of the week, and that's good. That might cause potential, second, third order effect. So we'll just take it easy. We'll see what the market is. Is it going to be up? Is it going to be down? We'll make our decision, tomorrow morning. For the monthly tracker, for the 2 days in July, we're at $420.52. And for the yearly tracker, we already mentioned this number earlier. We're at $17,376.15. Right now that we have all of these numbers discussed and talked about, I think running your own covered calls and cash secured puts is a great way to make an additional income stream. And let's talk about what I plan on doing for tomorrow. All right, guys, now that we are at Robinhood, let's head over to QQQ and take a look at the different options I might be running tomorrow. Like I said, I might just get 100 shares right off the bat of QQQ so that I can run a covered call. Yes, it's trading at the 551.58, and that's relatively high over the last year period, and it's an all-time high. So maybe tomorrow might not be the best time to buy 100 shares because it might regress or it might continue to go up. Nobody has a crystal ball, but let's take a look what the numbers might look like. So to run a covered call, do sell call, and QQQ trading at this 551.51. So if I were to buy 100 shares of QQQ, I would be able to choose this strike price at this 552 without losing any money and racking it $126 of premium. Ideally, that is something I can do. Or if I, want to get maybe $50 more of appreciation, if it were potentially to go up, I can choose this 104 premium and that 552.5 strike price. But let's play devil's advocate and let's choose this 552. Now let's look at what the cash secured puts might look like. So QQQ trading at this 551.51. And for me to maximize my premium amount so that I can hit that $1,000 a week goal, I can potentially choose this 550 strike price, 3 times so I can get that 144. So that'd be 288, 3, it'd be like 420-ish plus the 126 from the covered call. We'd be well over our $500 mark, and that would be more than enough to hit that $1,000 a week goal. But ideally, I don't want to over leverage myself, because if the market were to go down, if I were to buy 3 contracts at this 550, then I'd be stuck at owning shares at a higher cost basis than what the market is trading at. I don't want to risk it, and I don't want to. I don't think the juice is worth the squeeze, but we will see what the market looks like tomorrow, and I might just have to be a bag holder if that happens. Yeah, guys, that wraps the video. Let's stay locked in, stay disciplined, and stay harvesting. Matt out. See you in the next one.